Cesim Global Challenge Simulation. Hello, and welcome to this detailed session on the Cesim Global Challenge. This video was created based on multiple requests from friends and fellow participants who wanted a clear, step-by-step guide to decision-making in Cesim simulations. Specifically, we'll walk through round 9 as our reference point, but the strategies and insights shared here will apply to all rounds, especially rounds 1 to 10. This session is designed to help you understand the game structure, how to analyze reports, use Excel effectively, set smart prices, forecast demand, and plan production with precision. If you follow these steps carefully, you'll significantly improve your chances of achieving top sales, profit, and shareholder value. Part 1. Overview of game results. Let's begin with a quick performance snapshot. We are team number 10, and after completing 9 rounds, our results are impressive. Sales, among the highest in the simulation. Profit, we're currently in the top 2. Market presence, strong in all 3 regions, USA, Asia, and Europe. Here's a breakdown. USA, consistent double-digit sales and around 10% market profit. Asia, ASER, very strong sales and nearly 20% profit share. Europe, solid sales and about 15% in profit contribution. What you're seeing now is the cumulative result of carefully analyzed decisions. Let's now reverse engineer this outcome so that you can do the same from round 1 onward. Step 1. Review past results before making any decision. Always begin with the financial statement and performance reports from the previous round. Why? Because you must understand how well your products performed, whether your pricing was effective, whether your inventory planning worked, which market segments are profitable or underperforming. You should do this consistently, starting from the practice rounds, 1 to 3, and every round after. Step 2. Analyze the market report. Now that you've seen your internal results, it's time to move to the market level data. Each round provides detailed insights into what products are being sold in each region, what prices competitors are using, what features, value or price, are dominant, what the sales and profit shares are by product and by company. In Cesim, there are 4 product types, Tech 1 to Tech 4, and 3 key markets, USA, Asia, Europe. Here's a simple strategy you can adopt based on the round. Early rounds, 1 to 4, focus on Tech 1 and Tech 2. These generate early cash flow. Competition is high, so pricing must be competitive. Mid to late rounds, 5 to 10, shift focus to Tech 3 and Tech 4. These offer higher profit margins, less competition as many teams struggle with R&D. Amp winking and laughing in pricing. Important tip: Tech 1 and Tech 2 can still be sold in later rounds, but they will generate lower margins and may become obsolete as market preferences shift. Step 3. Use Excel to forecast and plan. Now comes a powerful but often underused tool, Excel. Create a spreadsheet where you track product prices, sales volume, unit cost, marketing spend, estimated demand for the next round. Let's walk through an example from round 8. In the USA market, for Tech 3, we sold, price, $245, volume, 700 units. For Tech 4, price, $280, volume, 1,300 units. From this data, we know that increasing filters and promotions significantly boosts demand. So next round, if we raise filters slightly while maintaining price, we could sell 10 to 15% more. In Asia, Tech 3 was priced at $1,600 and sold nearly 2,900 units. Competitors priced lower at $1,300 and sold even more units. So here, we must decide between a premium strategy, higher price, higher margin, or a volume strategy, lower price, more units. For Tech 4 in Asia, price, $2,100, volume, 1,000 units. If we lower price to $1,500, we could sell up to 3,400 units, a huge gain. Use your Excel to simulate different price points and forecast demand accordingly. Step 4. Market-specific adjustments. Let's talk about each region. USA, competitive market, early adopter of all tech levels, focus more on quality, filters and features. Pricing range must remain sensitive to competitors. Asia, ASER, often less price-sensitive, value high-tech features. Good market for aggressive Tech 3 and Tech 4 expansion. Adjust pricing based on volume. You want to push Europe, more mature, Stable market, strong demand for Tech 3 and Tech 4. Our results show we had top sales here in round 9. Our Tech 4 in Europe sold, price $260, volume 1,200 plus units. Again, use Excel to project demand based on price, number of competitors, feature levels, marketing budget. Step 5. Demand forecasting. Every round provides market outlook data, which includes expected demand growth rates, customer segment preferences, competitor count. You can use this to estimate total market size, average demand per company, adjusted demand for your company based on your competitive edge. In the simulation dashboard, use the demand section to input estimated demand values for each product in each market. This forms the foundation for accurate production planning. Step 6. Production planning. Now that we know what to sell and in what quantity, it's time to plan production. Golden rule: always check inventory first. In round 9, our inventory levels were Tech 3, almost zero; excellent Tech 4, around 1.6 million units; manageable. Poor inventory management leads to excess inventory costs, holding costs, waste, or obsolescence. Once inventory is accounted for, use your sales forecast from Excel and deduct existing inventory to determine production quantity. Our round 9 plan was Tech 3, demand equals 2,300 units, inventory equals 0, produce 2,300 units. Tech 4, demand equals 3,700 units, inventory equals 1,600 units, produce 2,100 units. Production cost is also affected by capacity planning, automation, investment, maintenance decisions, so review those parameters carefully. Step 7. Investment, R&D, winking and laughing, and finance. You'll also make decisions about R&D, winking and laughing. Focus on improving Tech 3 and 4. Don't waste on Tech 1 in later rounds. Marketing, tailor budget per market. Use filters strategically to match market needs. Finance, avoid large loans unless for capacity or emergency. Monitor debt-to-equity ratio. HR/training, enhance productivity with training when profitability is stable. Summary, winning strategy recap. Let's summarize the 7 key steps to win Cesim Global Challenge. 1. Review previous round results, understand what worked and what didn't. 2. Analyze market reports, identify best-selling products and competitor moves. 3. Use Excel to simulate outcomes, plan price and sales forecast. 4. Adjust strategy per region, USA, Asia, Europe behave differently. 5. Forecast demand using growth trends, plan realistically. 6. Plan production based on sales, inventory, avoid underproduction or excess stock. 7. Optimize R&D, winking and laughing, marketing, and financials, focus investments on long-term gains. Final thoughts: the Cesim Global Challenge is not just a simulation. It's a strategic management lab where your decisions mirror real-world consequences. Mastering this simulation means thinking long-term, being data-driven, adjusting to competitive dynamics, staying efficient in production. By following the framework in this video, you will build a strong foundation to win, not just in the game, but in any business environment where decisions matter. Thank you for watching, and good luck in your Cesim Global Challenge. If you have any questions or want to share your results, feel free to leave a comment or send a message. Part 2. Certainly. Below is a completed and polished lecture script, approximate 2,200 words, for your Cesim Global Challenge simulation video. It retains your ideas, expands on them where necessary, and presents the content in a clear, instructional, and engaging format suitable for a video lecture. Cesim Global Challenge Simulation, Round 9 Winning Strategy Walkthrough. Hello everyone, and welcome back to our Cesim Global Challenge Simulation Strategy Walkthrough. In today's lecture, we will be focusing on Round 9, one of the final and most critical stages of the simulation. I'll guide you step by step through production, demand estimation, marketing, HR, logistics, R&D, winking and laughing, finance, and other strategic decisions, helping you maximize performance and secure a top ranking. Let's begin with the decision-making interface. Production planning and outsourcing. As you can see on the screen, we have our production capacity clearly displayed. In the USA, we have around 6,800 units available, and we also have outsourcing options in both the USA and Asia, up to 2,200 in the US and 2,000 in Asia. These outsourcing capacities give us flexibility in meeting demand without overinvesting in fixed capacity. For product Tech 3, we anticipate demand of around 6,400 units this round. So, we plan production and outsourcing accordingly, produce 5,300 units in the USA, outsource around 1,100 units in Asia. This combination covers our total expected demand while optimizing for cost efficiency. Outsourcing in Asia tends to be more cost-effective in this scenario. For example, producing 100 units in-house might cost $197, while outsourcing the same in Asia could cost $109. These differences are significant when scaled up. It's important to play with the numbers on the screen, test different combinations to minimize production cost while ensuring total availability meets demand. Demand estimation. Next, let's look at demand estimation for all products across markets. We're currently offering Tech 1 to Tech 4, but we're focusing heavily on Tech 3 and Tech 4 as they drive the bulk of revenues in the late rounds. For Tech 3, America, 4,500 units. Europe, 1,100 units. Asia, 800 units. For Tech 4, Europe, 1,200 units. Asia, 600 units. Make sure your estimated demand inputs match your marketing assumptions and pricing strategies, or you risk overproducing or running into shortages. You should also adjust the expected growth rate and competitive reaction to stay realistic. Use the data from previous rounds and the analyzer tool to fine-tune these estimates. HR and staff planning. Now let's move on to the human resources decisions. Set the number of workers based on your production plans. Adjust the monthly wage, e.g., $3,000 per month. Monitor the change in efficiency with any changes in workforce size. Be cautious with batch size changes. While smaller batches might reduce waste, they also increase complexity and cost. Always double-check your total HR cost in relation to the expected revenue to avoid eating into your gross margin. Research and development, R&D winking and laughing. In round 9, R&D winking and laughing still plays a vital role, especially for improving Tech 3 and Tech 4. We added the final features to our Tech 3 and Tech 4 products. Total of 10 features. Each feature costs around $5.5 million. This is a long-term investment in product competitiveness, helping to improve perceived value, which in turn supports premium pricing. Even in the later rounds, continuous investment in features can give you a final push ahead of your competitors. Marketing and pricing strategy. This is where strategy becomes an art. Let's start with the America market. For Tech 3, we analyze competitors' prices from round 8 using the analyzer tool. Based on their pricing and market demand trends, we set our price at a slightly competitive level, ensuring strong margin while avoiding price wars. Let's say, Tech 3 in America, $1,402. Tech 4 in America, $2,000. Promotions, around $30,000 in Europe, based on market sensitivity and previous sales data. Tech 3, $1,200. Tech 4, $2,400. Promotions, $25,000 in Asia. Tech 3, $1,100. Tech 4, $2,100. Promotions, $24,000. Make sure to maximize the number of features per product and adjust pricing accordingly. The higher the number of features, the higher the value perceived by customers, allowing you to price more aggressively while maintaining good sales. Also, promotions directly impact awareness and certainty. If you want to guarantee higher sales, increasing promotion budgets is a smart move. In round 9, we use promotions to secure market share and support price increases. Always monitor the gross margin after marketing decisions. Ideally, you should keep your margin above 30%. Logistics and inventory management. Let's now discuss logistics and inventory decisions, which are often overlooked. For this round, we produce most units in the USA, export to Asia and Europe. For Tech 3 and Tech 4, for example, Tech 3 produced 5,300 in the USA, 1,100 outsourced in Asia, delivered to 4,500 USA, 1,100 Europe, 800 Asia. In this configuration, no significant inventory left over, no major unmet demand. If you notice excess inventory or unmet demand, adjust your production or delivery plan accordingly. Avoid accumulating in used stock, it increases holding costs and leads to inefficiencies. Tax optimization. Let's quickly cover regional tax optimization. You can adjust tax percentages in each region, within limits. Try setting tax from 1% to 2% depending on your profitability in that region. A small tax reduction can boost your net income, especially in high-volume markets like the USA. Be cautious though, some rounds may penalize unrealistic tax reductions. Financial strategy. Final rounds. Round 9 is almost the final round, so financial strategy becomes crucial. Here are your key options. Buy back shares if you want to increase EPS, earnings per share, and stock price. Pay dividends to signal strong financial health and increase investor confidence. Ensure you maintain enough cash reserves to support operations in the final round. Monitor your balance sheet to avoid excessive short-term loans or large negative cash positions. A strong cash position and shareholder payout in the final rounds can boost your final scorecard and investor perception. Final checks and projections before submitting. Always go through the checklist. Heavy checkmark. Production matches forecasted demand. Heavy checkmark. HR costs are under control. Heavy checkmark. R&amp winking and laughing. Investments are reflected in features. Heavy checkmark. Prices are competitive, supported by promotions. Heavy checkmark. No inventory overflow. Heavy checkmark. Deliveries align with logistics plan. Heavy checkmark. Finance strategy is cash positive. Heavy checkmark. Demand estimates align with analyzer predictions. Use the projection tool to simulate your results. In this round, our strategy. Projects. Sales increase by 20%, profit increases by 39%, gross margin remains stable, inventory levels are optimal, market share remains strong across all 3 regions. These are all strong indicators that the strategy is working. If projections are far off, revisit pricing, demand, or logistics before final submission. Closing notes. Remember, Cesim Global Challenge is not just about maximizing numbers, it's about building a sustainable strategy that performs consistently across regions and products. Round 9 is where your long-term decisions come to fruition. You can't afford to make major mistakes at this point. Use all the data available, competitor analysis, internal reports, past round trends, and performance benchmarks. And finally, before you click submit, double-check your numbers, communicate clearly with your team, align every department, production, marketing, finance, R&amp winking and laughing, under a cohesive strategy. Thank you for watching this detailed walkthrough of Round 9. We hope this strategy helps you lead your team to top rankings in the Cesim Global Challenge. Good luck with your simulation, think strategically, execute precisely, and win decisively. If you found this helpful, check out our full set of tips and free resources at backhand index pointing right https://top30tipsforsim.blogspot.com. And if you need free support for round 1 and 2, email us, envelope with arrow cesimhelp2020@gmail.com. See you in the next session.